morning, traders. Welcome back on my YouTube channel for my second video on talking retail levels and institutional levels. Last week we did a pretty nice video on gold. With the second video, I will cover gold again from my perspective. Last week we talking about price ranges, institutional levels and retail levels. Today I will do that again, and I will go over my last analysis on gold for you. I got a lot of feedback from every single one of you through social media, Instagram, Facebook, and of course on my community as well, with a lot of positive feedback. So I want to thank you for that, and thanks for watching this video. Gold on the daily time frame, we saw a pretty nice leg to the upside. We was talking about overall structure and trend direction last week, and as you can remember, current price action, the price range of the price. Right now, if you look into this, the analysis from last week plays out very nicely. We was talking about that zone, that demand zone on the bottom. I will cover that in shortly for you. Again, I have cleaning up the complete charts, and we will break down this trade again from a fresh eye point. Daily time frame, you can see it's overall bullish, and I do expect some more bullish movement on gold as well. Let's see. Okay, if we move into the 4 hour, you can see that nice rally to the upside. Okay, really beautiful rally to the upside. Last week we had mapped out a couple of interesting levels. Remember, we had this zone in place, and we had this retail level in place. Okay, and you can see price made that little leg to the downside in this block right here. Okay, in this critical price area right here, and as you can remember, we had also added that little momentum slash trend line, and I was mentioned to you traders, be careful with shorting this. Okay, be careful with shorting this. You can see that price had made several interesting spots. We had the level right here, we had the level right here. Yeah, and you can see that the price never broke to the downside, so it's good that you didn't short it. Like I mentioned, it's overall a bullish market. So of course you can grab the pullbacks. I will not say you cannot short this, it's possible, but understand the price ranges between those retail and institutional levels, okay, which is really important. You can draw on this level a little bit more to the left. You can definitely see that we created that nice leg to the downside, and price failure to break this area right here. You can definitely see that price failure to break this area, and price started to took off. Okay, it started to took off. It started to rally to the upside. Okay. And now we have broken to this range. I do expect a little retracement to the downside again. It's possible, you know. And yeah, I would definitely say we could push a little bit more to this side or a little bit more to this side before we're gonna see another rally to the upside. But as you can see in this analysis, it is pretty important to understand those retail and institutional levels, so you then don't get caught in fake moves and manipulation moves. Okay, I do expect a lot of retail traders have more than likely short gold around this area. First time it was pretty nice, it was pretty well. A lot of retail traders are checking on candles like this candles. Okay, I will highlight it a little bit for you. This rejection candles, which is fine, but be careful with entering trades on just one simple rejection candle on a retail level, okay? Because this is a retail level that we're seeing right here. And you can see that a lot of retail traders have shortened this market right here, but price made his last push to the upside. And you can imagine where a lot of retail traders have their stop losses, okay? Their stop losses are above these levels, okay? Above these levels, the spikes, and you can see that there was a pretty aggressive spikes to hunt all those stop losses, that stop loose pull from retail traders before we're gonna make that leg to the downside again, which was pretty nicely, okay? It was pretty nice. On the lower time frames, I will highlight it a little bit for you. You can see it even better. So this was a 4H rejection candle or doji or whatever you want to call it. Those big boys don't want you to win. They don't want, okay? So there is always manipulation around these edges, and you can see it happening clearly right here as well. And after that, we start to create the leg to the downside, coming down to this nice blocks / bases before we're gonna see the rally to the upside, okay? So more than likely, after a nice bull or bear run, there were always a good retracement, okay? And you can see that gold have shown a lot of bull pressure from last week. So I do expect price will create a new leg to the downside before we're gonna move with the big money in waves to the upside. That could be a scenario, okay? So yeah, I hope this video makes a little bit more clear for you, especially those retail levels and how retail traders are getting caught in in those stops, the pool of stop losers, okay? Example, you can see it happen right here as well, which is crazy. Again, a retail level, again, a rejection candle, a lot of retail traders entering on this rejection candle, and price start to hunt for stops again before we're gonna see that major drop. So always be patient if you're looking for entries, and try to understand those institutional levels / retail levels, because that is where the big money is, okay? Using the combination of it is really, really, really powerful. Price ranges, critical ranges, and so on. Let me show you something else. If you're looking more to the left, you can see price was for a long time bullish, okay? So a lot of buyers have entering this market over and over and over again. Myself, I mainly scalp, so I'm using the 4 hour, 1 hour, minute 30, minute 50 for executions. If you're more a swing trader, I would advise you to using the higher time frames, okay? Followed by overall momentum. Because I know a lot of people are swing trading as well. If that's your style, why not? You know, why not? You can trade perfectly swing, but make sure you're using the higher time frames, okay? And riding the waves between these levels. Example, you can see nice little bear trend right here. If you're moving to the lower time frame, you can spot those levels pretty nicely within those blocks. You can identify the block right here. You can see price rally to the upside, pull it back to this block and took off, okay? This is just a little example, okay? For gold, for upcoming week, I do expect some more bull pressure, but let's see. Hope you enjoyed this little video. If you have any questions, hit me up in the DM or visit my website, theforexscalper.com. And more videos about talking institutional levels and retail levels to come. I'm not gonna make this video too long to listen, just short videos with useful information, totally for free. So I hope you'll enjoy it, and I wish you all a wonderful trading week. Make the best of it and trade safe. Much love, greetings, Kev. Bye-bye.